in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets. This edition of the Moving Iron Podcast is brought to you by Dawson Tire and Wheel, your premier ag tire and wheel provider in North America, helping people grow. TractorZoom delivering insights, and Dryshod Boots, the official work boot of Moving Iron Podcast. This edition, my guest is Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida, and he is pretty much a regular on here every week. So, Shawn, how you been today, bud?
I'm doing real good, Casey. We finally had some upward excitement for the first time in a long time.
Yep, that is very true. So, Shawn is on here. We're going to recap the kind of the reports that came out, quarterly stocks report, as well as the acreage report and the crop progress all at the same time, kind of hit all the same day today. So, Shawn, I guess as you take a look out there and what you saw happen in corn, I think finished up whatever it was, 12 and a quarter, I believe, for July corn, and we're pretty close to that.
December corn was up, December corn I think was up like 14 or 15.
Yeah, so soybeans were up big.
The soybeans were up, around 20, 18 to 20, something like that.
So I guess as you take a look out there, give me your kind of input on what you saw happen today.
Let's take the quarterly grain stocks. Wheat was pretty much what was expected. Soybeans were pretty much what was expected. Corn was a little more than the average, but it was within the margin of error. So the quarterly grain stocks there was nothing in there that shocked the market or got the market excited in either direction. What really got the market going was the acres. Corn acres down 5 million from the March planting intentions report. That was a big miss. I think the estimate was something
like 1.8 million. Yeah.
So it was a big miss. It was a big knockdown, and that means that. And we talked about that. We said that this is the year not to bet on the U.S. farmer planting more corn. We talked about how because of the economics, because of last year's experience, that the fringe acres they were just not going to get planted despite having good weather. So. That kind of shaves something like 700 million bushels off the top of spreadsheets now because we've lost those acres that can't be calculated, assuming a trend line yield, and assuming that the current demand side factors that are being used are correct. Instead of being 3.3 billion bushel carryout, we're looking at something like 2.5 billion bushel carryout. While it's still plenty of corn, Casey, it's a dramatic psychological difference. And instead of having corn in the low threes and cash corn under 3, what this means, we should have our corn price kind of back to where it always had been in that 360, 380 December corn range, kind of where we would have been if we never had the pandemic to begin with. And so when you look at the December corn contract, 350, 352, I think we're heading back to normalization because these acres not being planted now changes us back to, we have a lot, but it's not anywhere near as overbearing as we thought. And by the way, we haven't even pollinated the corn crop yet. And the weather's looking a little sinister. That's kind of where we're at. And with the soybean, everyone thought soybean acres were going to rise, at least a couple of million acres, because everyone sort of felt that if we took a few million off of corn, we'd add a few million on the soybeans, and the number came in flat from the planting intentions report. So losing 2 million acres of the soybeans that everybody thought, means that the expectations have to throttle back down, about 100 million bushels. So you look at the soybean ending stocks and you look at, where we are, and you take an expectation of 100 million bushels off the top. If we have any kind of weather problems in August, you take a couple of bushels to the acre off of the soybean yield in stocks in the U.S. we've seen in at least 10 years. So it changes everything. And it appears to me that it's happened. If you remember last year, what was the quintessential 2 words that everybody talked about, Casey? Prevent plant.
Prevent
plant. And we never quite got the prevent plant bullish number that everyone was wanting to see. And we never even heard that this year. And it looks like prevent plant, people imagine, because of the economics, because farmers had so much corn sitting out in the field that they hadn't harvested from last season.
Yeah.
And because some of the weather that we had with the frost and everything, that just economically didn't make sense to do. It appears this is the year prevent plant actually is going to make a difference. When last year it didn't appear to make the difference that everybody thought it was, and that's kind of interesting that what people focused on last year didn't happen. What they didn't focus on this year now is what's happening.
Right.
Kind of an interesting twist on how the market operates in the social media world that we live in today.
Yep. All right. So speaking of weather, let's talk about that a little bit. So as you take a look out, the long-term forecast, or long-term, like the next 10-day forecast, I mean, there's some pockets of rain that kind of pop up here and there in the Corn Belt and those kind of things. But for the most part, it's supposed to be fairly dry and wicked hot. As we go into this weekend, that's going to be a pretty good tale about kind of how things keep progressing forward. So I guess talk about the weather patterns that you're seeing right now and how that's going to play into what we see going on.
If you draw a line, Casey, straight down the middle of Iowa, the that's going straight down the center. To the west, we're looking at a lot of areas staying very hot and missing a lot of not getting timely rains during pollination. If you go to the east, as you said, it looks like there's going to be enough spotty rain that, in some places, adequate rain. But the problem is that the humidity, the dew points that we're looking at are going to be in the mid-upper 70s, even to some low 80 dew points in a lot of areas from eastern Iowa, central to the eastern Corn Belt. And in fact, some of the humidity is going to be high. That says to me, we talked about the corn yield killers. It's warm, humid nights that does not allow the corn crop to respirate and rest. And if you get a persistent, 1 to 2 week period during key pollination, and you have warm, humid nights, it can significantly hurt pollination and hurt yields. In fact, saw this in 2010 and 2011, where we actually had, in many areas, adequate moisture, but the yields just didn't make it. We actually, the USDA and many analysts were optimistic about yields, and then as we moved into August, September, the USDA stopped yields down, realizing that pollination just did not go well. And we think there's a repeat that we could see this go around that we're going to see that happen here. And so we're pretty optimistic that the weather's not going to be ideal. It's not a disaster. It's not like this is 2012, 1 in 100 year drought. We're saving that for 21-22. But this would be enough of a problem, Casey, that we think we could shave of the current corn yield that's on top of the 800 million bushels we just lost because the acres didn't get planted. Now you're starting to talk about 2 million bushel, 1.8 billion bushel of corn, assuming that the current depressed demand side levels, which is still assuming the death of ethanol, by the way, are correct, which we think they're not. We talked about how we feel the demand side expectations are going to have to be increased in the months ahead. So where we think we're at, we think we're going to be back to normal corn stocks. The 1.7, 1.8 that we had in 18, 17, 2016, and what was flooded corn average, $3.80 to $4 corn.
Yep.
So I think unless the weather's worse than we think, Casey, later this month, and of course it could be, unless it's worse, we think we're going back to $3.80 to $4 corn, where we had been forever. But while that's not going to allow for someone to buy the island of Fiji and retire, it's a heck of a lot better than sub $3 cash corn. And that's what we think.
Yeah, better off where we're at there. Okay, so another thing I want to talk to you about real quick, too. There's some overnight talk about China stopping some shipments coming out of Brazil, not buying as much stuff out of Brazil because of concerns about the coronavirus and where they're at and what they're doing there. That's got to leave the door open a little bit for the U.S. marketplace to really maybe even compile on top of this kind of bullish news that we have coming right now.
I'm sure you have, and I know I have. I've been watching the interaction between Bolsonaro, the leader of Brazil, and the Chinese, and there has not been good discourse between the two. I mean, Bolsonaro has been very anti-China and just not really playing along with saying they're all wonderful, all powerful, all being, and there's been a lot of friction there. And I think that it's, right now, we're looking, of course, at the virus in Brazil continuing to be probably one of the worst in the world at this point. The Chinese are probably, look, the virus is everywhere, so I think they're just using that as an excuse. I just think they're upset and they're not pleased with Bolsonaro and some of his words and activities. And so, the way the Chinese play this game is, I don't like what you're doing, we're going to make sure you feel the economic pain of it, and that means to the extent that it does, and I think that it will, a little faster, maybe a little more aggressive than it would have otherwise been. So.
Yep. Okay, so let's bounce over and talk about rice for a second. So the rice market is, they had their stock report come out today as well, as long as that, and the rice market got some volatility just because of what's going on in some other key growing areas of the world. So talk about the rice market we see happening there.
Rice is a very unique agricultural commodity because it's really the only ag commodity that the world lives off of that doesn't have to be processed. Meaning, you take rice and you can eat it as you can come up to eat as is, a little water. I mean, you can just eat it as is. You have to do something to it. You got to bake it. You got to do something to it. Now, don't get it. People do, but rice is a pure ag commodity that everyone must have when they have nothing else to turn to, when they're broke and they're out of food. Rice is what they live off of, and they keep themselves going. Because of that, there's been a massive hoarding mentality that has developed in Asia. And of course, this has been going on with the virus raging in India, raging in Asia, raging, of course, now again in China, it's like Beijing is shutting down the whole city of Beijing because they can't keep that under control anymore. And so, the biggest fear of anyone who rules an Asian country is not having enough rice. I mean, you cannot have enough rice or else you're gone. And I mean, maybe gone. That's how they feel about the rice in Asia. Mm-hmm. And so, because of that, we've had this hoarding mentality, and because of the virus. Remember, rice is a highly migrant worker-led planting and harvest. It's not mechanized in Asia. They don't go around with big rice combines and rice crop. It's done by the migrants. And with the shutdowns that we've seen, these migrants have gone, and there's chaos. Many of them not coming back. They don't know where they're supposed to go. They're not comfortable. They're all getting sick. And it's absolute chaos with the migrant worker force in Asia. And so it's really hard to know, can they get the crops planted? Can they get them harvested? Can they get them logistically moved in countries that are going through this kind of chaos? Very, very difficult to figure that. And then so we're dealing with the U.S. rice market. We literally ran out of rice, what we call Western Hemisphere. We ran out. We went up to $23, $24 July price, which was equivalent to what we went in 2008, as an example. They ran out of Western Hemisphere rice, and the Asians weren't in interest in selling it to us, so we ran out. So in the context of running out, the U.S. market wants to know for sure that the U.S. is going to have a good crop. We have to have, not only a good crop, we have to have a big crop. So what it's trying to determine is, okay, we've planted more acres, got it, but can we deliver on yield and actually start to rebuild some of these stocks from zero? And we've had very unfavorable weather, again, during the planting season. Although, of course, because the price is so attractive, the rice farmers found a way to just fly overhead and drop it down. I mean, they went to all extremes to get it in there. Doesn't mean it's going to turn out well, by the way. But we're really, really concerned, Casey, with the active hurricane season.
Right.
The active hurricane season this year, we already had one system go through New Orleans and Arkansas already, and we haven't got started yet. We are deeply concerned that we're going to have a series of active tropical hurricane ton of storms that could come right in to that key belt in Arkansas and the deep south, and exactly that the rice crop needs dry, warm weather to get harvested And if that were to occur, we think there's a very good chance that may occur. It's all over. The crop's not going to deliver, and then it's a mad dash to boulder dash to try to buy whatever supplies are available. And so it's a very interesting market, Casey. And it's possible that the September contract could experience another squeeze like July if it's viewed that the crop's not going to make it, and if we get a hurricane coming in August or something like that. So it's a market that we've been telling our producers. We call it a put option only market, meaning that if you're a producer, instead of making cash sales, we think this is a time to be putting some protection on and leave the topside open in case that happens. It may not happen. Maybe things will work out. We hope it works out. But producers, we feel, need to be looking at protection, not cash sales at this point, until we know more about how this is going to play out.
Okay, so with that being said, with having an active hurricane season will bring, if that works out the way what you're describing, the cotton market should have some real struggles, especially when the hurricane season comes through. That's usually during some pretty key plant producing times of the year. So, I mean, what right now we're seeing, I think today cotton closed at 61 cents, 61 and a half almost. So I guess as you take a look at the cotton market, they're again heavily hit by the coronavirus and the shutdowns we see happening out there. What's your thoughts there?
Well, first of all, the cotton crop was up nice. I mean, the cotton price was up nicely today because the acres also didn't deliver.
Right.
It was almost 1 million acres below the expectation. And remember, we're talking about 13 million acre base. So 1 million on 13 is very high percentage loss.
Quite a bit, yeah.
And we already are burning up in central western Texas already. We're already burning up. It's already a drought, already well underway. Crop conditions are awful, and it looks like it's going to get worse. So we have that going already. But yes, the history of active hurricane seasons is that heavy rains tend to come into the deep south, into the Texas region, exactly when open bowls are wide open, and when they least need deluge and heavy rainfall. And yet that's exactly when these hurricanes come in, when those bowls are wide open and very susceptible to not only having lost yield potential, but also lost quality potential. The U.S. is known for one of the highest quality grades in the world, and when we get too much rain on bowls, even if it should survive, the quality of the fiber goes down, and then you'll have a shortage of high-quality cotton in the world. And so that really is another market that could be significantly impacted. And, of course, the other market that we talk about and have talked about on this program that's sensitive to an active hurricane season is the orange juice market in Florida, in Central Florida, where all the oranges that are used to process for orange juice are grown. That's another area that is also extremely vulnerable to an active hurricane season. And remember, the coronavirus demand for orange juice has grown in excess of 20% this year because people want more vitamin C. We had 20 years of declines in the U.S. And so to see a year where we've seen demand go up 20% is extraordinary at a time when the U.S. crop was small to begin with last year, and the Brazilian crop is the lowest in 20 years. So that's another market that can ill afford anything but perfect crops going forward. And obviously, if a hurricane were to come through Central Florida, it would just take the crop out for the next crop potential out for next season. And that's just not something that the orange juice market would take kindly in terms of price. It would have to go up a lot to reflect lost supply at a time of historic change in demand due to the coronavirus, which doesn't look like the worries over that's going to be going away anytime soon. The way it looks like things are going from a media and governmental perspective, looks like we'll be worrying about this virus all the way in the fall, it would appear. But it was right along. So.
Well, man, good stuff. It's good to see the markets kind of make a swing across the board. I guess every kind of, high tides raise all ships. So we're starting to see some movement in the marketplace into the positive direction. We're getting, from the livestock perspective, we're getting more and more kills every day running through the slaughter plant. So that bottleneck's starting to get kind of cleared up, and you're starting to see that reflect in the price a little bit too. So it's just it's a roller coaster ride for sure, and these markets are crazy every day. And if folks are working on what to do next, how they get a hold of you, Shawn, so they can see what you got going.
best place to start, Casey, is our website at Hackett, Hackett, advisors.com. They can get a look at some of our podcasts, some of our interviews or videos. They can get a sample report, kind of get a feel for how we think and how we do things. And if they like what they see, then maybe they would seek us out to help them, kind of manage this increasingly volatile environment that we're in right now. And we'd be glad to do so if they choose to do that.
Right on. Well, good deal, Shawn. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram for all the latest podcasts that I have out there, and then any blogs that I put out as well. Make sure you check out there. Also check out movingironllc.com for all the latest information about the Moving Iron Summit coming up here in Nashville, Tennessee, September 1 through 3, downtown there on Broadway at the Renaissance Hotel. Shawn's going to be one of the speakers, and he's got tons of information. He's going to be sharing about a myriad of different options, especially when we start talking about weather. And anyone that's listened to the podcast, I've had Shawn on here a couple times. We've talked about, what we can kind of see with the La Nina effects in the whole sunspot cycles, and those kind of things. So grand solar minimums and those kind of things. And you're starting to see the effects. So I highly recommend anyone going back and listen to those podcasts and then take a look what's going on, and you're going to see a lot of correlations to what Shawn's been talking about. Also, check out the Global Ag Network and the great podcasters there that are bringing great ag content to the great podcasters listeners of the podcasts out there. And I guess with that, that's about all I've got. Shawn, anything else you want to throw out there before we shut things down?
I would just kind of mimic what you just said about this your meeting, your conference coming up. We're going to kind of update where we are on a lot of these cycles, and actually add some new cycles that we didn't discuss last time that I think will be very foretelling. Because as you know, Casey, we have been warning about 21-22 weather-wise as a quintessential period to feel the first real example of these new weather cycles that are happening. And so I think it's extremely well-timed conference, and anyone going to it, I think, is going to have a really fresh perspective on what to expect and maybe how to adjust how they do farming to participate and thrive through it. So I think I'm really looking forward to it very much. So.
Right on. Well, with that, I am Casey Seymour, Shawn Hackett. Let's go move some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.